Yeah, I think it's probably something it's been a trend over the last, I would say, 18 months, but I'd say probably about 6 months ago, there's a bit of a watershed moment, I suppose. And this is around the way that we're thinking, or that we've been thinking about acquiring businesses. So, Iris is very acquisitive. We've bought about 30 different businesses over the last 6 years. But I think the landscape has changed. So post COVID, you had, pretty high valuations for software businesses. Then you had the sort of the listed businesses came off a little bit, but privately held businesses valuations didn't really change very quickly. There's always a bit of a lag. You then had the Russia-Ukraine conflict. We've had some political issues going on in the UK as well, different prime ministers. You've had debt going up. You've had inflation, and you've got this sort of perfect or imperfect situation of high valuations and also high cost of debt. And a lot of when we bring businesses in, we will borrow to do that. So suddenly your cost of capital is a lot higher. I think in the past we would have looked at businesses, we found a target, we would go through an investment case or a number of investment case meetings, talk about how we were going to invest in this business, continue to make it grow, how we were going to make it worthwhile bringing it in. And I think really about 6 months ago, we were sort of doing some of these investment cases, and I was sat there thinking, well, hang on a minute, because we're still potentially spending as much from a multiple perspective on these businesses as we were pre-COVID. But suddenly my cost of debt has doubled. I mean, the sort of, my Sonia, for instance, or software has gone up from, virtually nothing to 5%, which is quite a lot when you're thinking about your returns over a certain amount of time. So we actually need to start thinking about these acquisitions in a slightly different way. We need to be thinking about, well, how quickly actually can we generate the value that we want to make out of these acquisitions? So whether that is through, what revenue synergies do we have? What kind of cross-sell can we do? How quickly can we ramp that up? What sort of changes do we need to make to support management? All of those types of things. We need to be a little bit more aggressive in making sure we get there quicker, because otherwise debt just is ramping up in terms of underlying debt costs. And actually, when you look at it from that perspective, you say, well, hang on a minute, day one actually doesn't look anywhere near as good as it used to. So you've got the business and the sponsors within the business really saying, well, I really want to make this acquisition that we were looking at. And I was sat there saying, well, yeah, but when I think of the cost of capital and I think of what you've put forward for this particular acquisition, it doesn't make financial sense. Where we've got to look to is the next 18 to 24 months. So we need a really well-formed plan to say, how do we turn this business into, into faster growth? How do we generate that cross-sell quicker? How can we invest in the right way to make it more successful quicker? Because otherwise it just doesn't make financial sense. So it really precipitated a bit of a change in the way that we look at buying businesses and the way that we think about our investment cases. And I think the thing that I guess I've learned earlier in my career from working with some other CFOs is sometimes you've got to be that unpopular voice in the room and that sort of glass half empty person, because you've got to bring it back to this viewpoint that maybe not everyone looks at in the rest of the business, which is really around, the wider. It's not just about the EBITDA this business makes, but it's actually what's the overall impact on the value of Iris as a business and your cost of capital. So I think that was a real sort of watershed moment, I think, for me, in terms of making sure that we were focused on the right things that were going to generate value for Iris in the longer term, not just in the short term.
This podcast is made possible by Ledge.